Perfect. Hi, good afternoon, everyone tuning in. My name is Cora Matzek. I'm the Business Development Manager here with NuView Trust. Today, you are joining our LLC Formation Masterclass. We have a special guest, David Byck, who's here to discuss LLC formation and some of those details that you are inquiring about. And we are happy and excited to have you, David Byck, and ready to get this masterclass started and start your journey.
Woohoo! Cora, thank you for having me. I appreciate that.
Yes, thank you so much for taking the time, joining our education and assisting our clients in their journey. So we'll go ahead and get started. Before we actually get into the details of it, I do want to disclose our disclaimer. So here at NuView Trust, we serve as your custodian for alternative investments. NuView Trust does not provide tax, legal, or investment advice, nor do we sell investments. We custody IRAs, ESAs, HSAs, and 401ks that hold alternative investments chosen by the client. Today, though, we do have a special guest that can assist us with discussing LLC formation. So we'll go ahead and get in here. So self-directed IRA, what is a self-directed IRA? A self-directed IRA is an IRA which the IRA owner directs all investment decisions, but the self-direction term is a marketing term. It's actually not a type of IRA. So I always like to sum it up in, what does your custodian allow you to invest in? In other words, what is the menu of options that your custodian allows you to invest in? You typically hear of stocks, bonds, mutual funds. Well, here at NuView, our menu is a little bit larger, where you could still invest in cryptocurrency like Bitcoin, things of that nature, but also alternative assets like real estate, private lending, tax deeds, things like that. The benefits of self-direction: diversifying your assets, tax savings, and investing in what you know best. So here are some real estate options like rentals, Airbnbs, real estate contracts, unimproved land, tax liens, fix and flips, joint ventures. These are some of the examples of when we say real estate. This real estate sums up all of these different options that you have to invest with your self-directed IRA. And we'll actually have David Byck go ahead and start us off with discussing, what does it look like with checkbook control in an LLC. So summing it up, what you're able to do is you can go outside and set up an LLC and open up a bank account and have your IRA funded with that. David, do you want to tell us a little bit more about what this looks like?
Yeah, let's go into some detail because I think there's some confusion to understanding how the LLC works. LLC is a limited liability company, and that's exactly what it does. It provides a liability protection and separates you from your investment. Now, understand something, that an IRA is already considered a trust under the guidelines of the IRS, meaning that it's separate from you as an individual. It's a separate account. So, and it has tax benefits in having an IRA, which I'm sure you're mostly aware of. However, when you're doing a self-directed type IRA, it's practical and practiced where someone is going to open up an LLC with the idea of holding an asset inside the LLC. Now, it's important to note, when you hold an asset inside the LLC, let's say for example, a piece of real estate, the LLC is on title as the owner of the piece of real estate. However, you are not the owner of the LLC, your IRA is.
Yes.
So the IRA is the actual owner of the LLC, and you are considered the manager of the LLC. So in essence, you're calling the day-to-day shots of, we need to fix up, let's say, this rental property and put in a new floor. Well, you have checkbook control, and you can write that check to the repair person, whoever the case may be, who's going to in turn fix the floor in your rental property, let's say.
Right.
Again, you are managing that. You're not allowed to reimburse yourself or give money to yourself in any way, shape, or imagination. This money belongs to the IRA, and you're strictly managing it on behalf.
Yes.
So that's very important to know. Of course, when it comes to opening up an LLC for an IRA, you're going to have to go to a bank who understands how to do that. I actually have, through NuView, a self-directed IRA. and I bought a piece of property, or I'm in the middle of buying a piece of property in Costa Rica. So I had to find a company who was willing to house my LLC. I used Truist Bank, which were fine. Who was able to house my LLC, and the LLC's title was David Byck IRA. Excuse me, it was NuView Trust for the benefit of David Byck IRA. And the name of the IRA could be anything you want it to be. Mine was D. Byck Holdings. D. Byck, my last name, Holdings, LLC. What's the name of the LLC? And then the IRA, again, is showed as the owner. When I'm going to sign the documents, when I buy a property, this is a pre-construction, so we're sort of buying as we go. But when we sign those documents, I'm signing it as manager of an IRA, not as the owner. So you have checkbook control, meaning that you can write the check, or if you're buying a property, probably wiring funds from the checking account, the LLC checking account, to whatever title company you use. I hope that makes somewhat sense. Don't write checks yourself.
Yes. And, I think I do get this question a lot. I'll have clients call in and they're anticipating seeing their name held as the owner. So I'm glad you preface, like, it's not going to be under your name. It'll be the name under your LLC with your IRA. So if you are going to be setting up checkbook control, keep that in mind. It's not going to be directly under your name. You are not owning the property. So it's
correct
there.
So
yeah.
I mean, we talk about limited liability protection, and that's what LLCs do afford. You have double layer protection because you have that IRA trust level as well. But one thing about an LLC as well is, as an IRA, you can't just turn around and invest in real estate. I can't go to a builder or a house. Maybe you can if you're buying a house straight up in cash. But for general, you have to have some kind of entity structure attached to a tax ID number. So when you create that LLC, the LLC now has a tax identification number, and it shows the owner as this IRA. So when it comes to tax time, if you will, and a K-1 is issued, and now I'm probably getting a little higher end here, if the K-1 is ever issued to your LLC, it's not a taxable event. The IRS knows that that's an IRA LLC, and it's only for informational purposes only. If let's say you sell your property. After you owned it for a couple of years, you sold it. Let's say your IRA sells it, and you made $100,000 more than what you purchased it for. There is no capital gains. That money is still in the IRA. You take that money now and buy a different property, or like Cora said, invest in something else. That's completely fine as well. So the idea of asset protection, an LLC does give you the ability to separate yourself from the business. The IRA is already separated from you, but this is just an extra layer.
Yes.
Okay, so this can be confusing to people, but I'll give you a straight up. If you are opening up an LLC to invest your IRA funds, you are going to open a single member LLC because the only owner of the LLC is going to be your IRA. Okay, you can't commingle yourself with your IRA and say, oh, this is joint. Now, what you could do is open a multi-member LLC, and here's where you get confusing, where you have one LLC, which is like a holding company, that owns shares of your IRA LLC and then shares with you separately. That would be two members, but for the IRA purposes itself, the IRA should be in its own LLC, and it should be a single member entity. Because you're the only owner of the IRA is the only owner that could be in that LLC. Again, you can partner with other people who have IRAs or non-IRAs, but that would have to be through a multi-member LLC where a percentage of your IRA LLC would be owned by that multi-member. If that makes sense.
Yes.
So it's like a flow down, is how you will. For naming and location of the IRA, I mean, again, there's really no benefit from tax point of view because this is not a tax, investment structure. So normally, the state that you're located in is completely fine. Mine happens to be in Florida because that's where I am. But, I do have clients who have opened it in other states, and that's completely fine too. The naming does not have a bearing. As long as the ownership shows that the IRA is the owner, You could name whatever you want. Have at it.
Nice. Now, a question that we do get often as well for clients who are looking to invest in other states, should they open an LLC in the state that they reside in, or the state that they're looking to invest in, or is that a moot point?
I mean, again, for when it comes to, if you were opening up an LLC that was not owned by an IRA, I'd want to open it in the state where I'm investing in. Just so, because the property is in that particular place, therefore you want to go under those state laws anyway.
Right.
I'm not necessarily looking for anonymity when it comes with an IRA, because it's pretty much, it's hard to get charging orders on an IRA to begin with. So I'm not overly worried about that aspect. However, what you have to take into consideration is that when you have an IRA, and let's say I buy a property in North Carolina, and let's say a year or two later I sell that property, I'm going to keep my North Carolina LLC. And even if I buy a place in, California, it doesn't matter. I'm not going to open up another LLC in another state.
Yes.
If it's not an IRA, it's a different story. But for an IRA purposes, I tend to do it where you're located at home. There's no tax consequences, so there's no tax returns to be filed. There's a lot less red tape.
Yes, I see. So that's a good clarifying question and answer for those out there who are looking to form an LLC and they're not quite sure how they should go about it. So
yeah, I mean, it shouldn't matter where you form the IRA LLC.
Great. So what's the deal with operating agreements?
So an operating agreement is a governing contract between the partners of a LLC. Now, in this particular case, partners is a loose word because there's only one owner, which would be the IRA. So instead of a partnership agreement, what the operating agreement is really doing is it's stating the fact that what the money shall be used for and what the manager, meaning you, has the ability to do. So like my operating agreement would discuss that this money can only be used for investment purposes and go towards the property or towards rehabbing a property or furniture or whatnot. It can't be used personally. And as the manager, my only ability is to direct those funds. Does that make sense? I never take ownership of them. I never pull them out. You never intermingle your LLC IRA money with your personal. No, we don't do any of that.
Yeah, don't do that. Yeah.
So it just tells you what you should and shouldn't be doing and following, because there's no partner to fight with or anything. It's just you.
Right. Laying out those agreements before actually going into the investment. So there's no gray area. It's very black and white.
Correct.
So restrictions on utilizing your IRA. So there's people restrictions of who you can and can't conduct or lend money to, transaction restrictions and investment restrictions.
So there are things that people need to know. And here's where the IRS gets somewhat a little confusing and a little odd. For example, let's say I wanted to use my IRA as a down payment on a property, and then I personally want to take out a mortgage to partner with my IRA. Can't do it. The IRS won't allow it. You can't partner directly with your IRA. You can't have your spouse or your mom or dad or child partner with your IRA. It's considered a non-arm's length transaction, and it's not allowed to happen.
Right.
Now, however, that being said, that's only if you're getting a debt, because you're guaranteeing a debt. But let's say I buy a $400,000 house and my IRA puts $200,000 in and I put $200,000 in. There's no mortgage. That I could do because I'm not guaranteeing anything. It's money that we both put up. There's no mortgage on it. No problem. And now the agreement has to state that half of all expenses have to come from the IRA and half have to come from me personally.
Right.
If that makes sense. So
yeah.
That's an important rule that you definitely need to follow. Investment restrictions, you would probably know more than me as opposed to from the self-directed world, what you can and can't invest in. I know obviously commodities and,
collectibles and life insurance. Your IRA is supposed to benefit you while you're alive, not after you're passing. So,
I mean, I've done self-directed pretty much only for real estate. I don't know enough about the other stuff. Not to say it's bad or good. I'm just not familiar with it. But I loved it for the real estate side of it.
For those of you at home, you can screenshot this. These are some of the people restrictions that David was mentioning of who you can and can't do
There you go.
conduct with. So they're nice and easy. We've laid a nice little map out for you. So that way, again, it's very black and white, no gray area.
Yeah, exactly. You can't partner, but again, you can partner, just not get a mortgage.
Yes. So. And keep in mind too, to David's point, if you do split it 50-50, profit is 50-50, expenses are 50-50. It needs to be that way down the line.
Correct, 100%. Because otherwise, if you're ever audited, God forbid, and they find out it's not, that's where the problems happen.
Yes, and so great. We've discussed that. Now, cost segregation. We find this come up a lot. Could you elaborate on this?
Yeah, so cost segregation is really outside of an IRA. What cost segregation is for taxable assets. I mean, that's where it benefits best, obviously, where you can actually speed up, sort of the best way of saying it, your depreciation schedule at a quicker rate. Now, this again is for real estate purposes. So let's say I invest in $1 million property. And after the cost of land, the value is $850,000. Now, normally, if it's a residential property, I'm depreciating that over 27 and a half years.
Mm-hmm.
And it's an equal number on something called a straight line depreciation schedule. However, with cost segregation and bonus depreciation, which is currently out there, you have the ability to assign different parts of the home, different year periods to depreciate things. So let's say right now, for example, countertops, cabinets, crown molding, those may be, 10-year scheduled depreciation items.
Mm-hmm.
If you do a cost segregation study, that study assigns a value to all these different parts of your home. So the benefit is with cost segregation and the ability to take advantage of something called advanced depreciation, we're able to depreciate a lot more upfront.
Mm-hmm. Mm-hmm.
So what's the benefit of that? Because this is a taxable account, and let's say we show on this $1 million purchase, let's say we're depreciating $200,000 year one, which you can do with cost segregation and bonus depreciation. So now let's say I have this IRA that's invested in a property and it says $200,000 in there. I can do a cost segregation analysis and deduct $200,000 off my regular taxes.
Mm-hmm.
And what I would do at that point is then convert my traditional IRA that has this $200,000 into a Roth. And that $200,000 conversion is wiped out tax-wise because of the $200,000 cost segregation analysis.
Mm-hmm.
So that's a way to transfer IRA, taxable IRA funds, which is a ticking time bomb, down the road into Roths by using real estate, which is very cool.
Yeah. And you mentioned converting to a Roth IRA. So tell us a little bit more about
So if you convert to a Roth, what you're really doing is you're saying, I'm taking this taxable asset and turning it into a no longer taxable asset. We call that diffusing a tax situation. But understand, when you convert, there's a tax consequence, right? Because whatever the value of the IRA is at that point, whatever money's pulled out, they look at transferring to a Roth as pulling it out in theory. You're just changing the code. So you're paying tax for it now, but as it grows down the road, it's tax-free.
Yes.
There's no more, mandatory distributions or anything like that. Everything's tax-free even to your kids and so forth and so on. So it's valuable to do. You normally do a conversion in a low-income year or in a year where you do some cost segregation.
Yeah. So we hear a lot about Roths. Could you tell us a little bit more specifically on traditional SEPs and symbols? What's the difference between a SEP and a symbol?
Well, again, a SEP, a simple, those are small pension plans or small employee plans that you'll offer based on the number of individuals you have working for you.
Mm-hmm.
So, I mean, again, depends on the number of employees you have. And it depends if you want to guarantee a certain payment towards their retirement or a percentage or whatnot. So that really goes to hold of the actual operation of your business. If you are an individual earner, like let's say you're a real estate professional, you're a one-man show, I would probably prefer something called a solo 401k because you can put more money into it and you could fund it higher, and it could be a higher deduction if you need the tax write-off, or you could do a solo. Or you could do a solo Roth 401k, meaning it's not tax deductible, but it grows tax-free. Simples and SEPs fall into a place where SEPs are easy. There's no top-heavy testing, and you set them up quickly and after the year. Simples, 401ks, they have to happen before the year ends. So you have a lot less wiggle room, if you will. A little more planning has to be involved. And it also depends, again, for a simple, do you want to contribute less money than you would a SEP? Because a SEP, the employer puts all the retirement money in. Whereas a simple, the employees also put money in too.
I see.
So it really depends on, every employer is different, and I'd have to look at each employer separately to make that determination.
Right.
So, yeah, the big benefits of having a Roth are, one, there's no tax consequences when you pull the money out. That also means that you don't have to pull the money out. Whereas if you have a traditional IRA or traditional 401k, now I think it's 75. They're always changing the number, but
yes,
at a certain point in time, you're going to be required to pull that money out. And because the government wants their taxes. And God forbid you pass away or you die, and your kid's going to have to pull the money out. Someone's going to pay tax on it. Whereas if it's a Roth, tax-free, you're good to go.
Do you recommend everyone having a Roth account, or is it specific to?
You can do a backdoor Roth. Not everybody could open a Roth, but everyone could do a backdoor Roth. What I mean by that is there's certain limitations of income where you're allowed to do a Roth or not. So let's say you're not allowed to do a Roth, but then you do a regular traditional IRA, and then that money grows, and then you do like this cost segregation study, and you do a conversion. You're converting it in the back end. I love the idea of a Roth because it grows tax-free. I like the idea of putting money into a traditional solo 401k, getting a deduction in a higher income year, and then a lower income year using that conversion methodology to pay the taxes when you're making less money.
Yes.
So as long as you're smart and you plan ahead, those are things you can certainly do. But a Roth is a great thing to have.
Great. So we do have some questions here about specifically about LLC formation. So one of the questions that we have here are, what are the fees for structuring an LLC?
Well, a lot of the fees, again, first you're going to have the state fee. And that's really just the cost the state charges to allow you to open up an LLC there. I've seen anywhere as low as $125 to as high as over $1,000.
Well, yeah.
Every state is different. If you want an operating agreement drawn up, there's a fee for that. If you hire a legal person, it could be $100 or $200, maybe a little less. It's just you. Other than that, it's a matter of keeping it open, right? So normally each year you're required to have an annual filing, whether it's through a tax return where you're paying money that way, or to the government directly on an annual report.
Yeah.
Either way, the state's going to charge you. they're going to get their piece for letting you keep your LLC open.
Right.
But it's not overly expensive.
Right. So there's those expenses there. What are the benefits of structuring an LLC and then utilizing the LLC to invest in alternative assets?
Well, again, I can't necessarily speak about like Bitcoin and stuff like that. I'm not overly familiar with how that works per se. I'm still trying to figure it out myself. But when it comes to real estate, you don't never want an IRA on the title. So I don't want people to see publicly Dave Byck IRA is the owner of a piece of property. There's no reason they need to know that. So if they see the owner of the property is XYZ LLC, that's all they need to see. So you do have some kind of anonymity there, which I think is valuable. Another thing that is really important is you have the ability to sell shares of an LLC. So let's say I have an asset and someone wants to buy that asset. I can just sell my LLC. I can sell my LLC to them, and my IRA takes now that money and no longer owns that LLC, and we go our merry way. The IRA goes somewhere else now. So you have a lot more flexibility with how sales are structured, if you will. I also don't think it's feasible if you're buying a pre-construction or things of that nature to open up with a title company under just an IRA name. I think there's got to be some kind of tax identification number attached to it. So I think having an LLC or some kind of entity in place almost is a must.
Yeah.
And again, I'm talking about real estate predominantly. I'm sure if you're investing in mutual funds, things like that, of course, you don't need that.
Right. One of the questions here is, how can I ensure that I fully understand the financial implications of forming an LLC within my self-directed IRA before proceeding? And I think really it's just a matter of having the right team in planning ahead. David, how can people get in touch with you if they're wanting to get more information on the tax side of this and LLC formations?
Sure. So I work predominantly in the real estate world. That's where my niche is. But I work with a lot of real estate professionals, whether they're investors or real estate agents or other type folk. My website is REP Tax Pro. It's Reptax Pro, stands for Real Estate Professional Tax Pro. And you can find me there, or you can find me at dave@reptaxpro.com, which is my email. And I'm happy to answer any questions directly. It's not a problem.
Great. So if you do want to learn more about opening an account or figuring out what to do next, go ahead and scan this QR code. You'll get in touch with an IRA specialist, and we'll be able to assist you, fill out an application, and you'll be able to start your journey to self-direction. And if you are looking for something fun to do in Orlando this coming fall, other than Disney, find us at AltCon October 17th and 18th. We have lots and lots of speakers on different topics, such as LLC formation, things of that nature where you can learn more. Scan the QR code to register. We do have a special promo code because it's still early where you get a discount on your ticket. And stay up to date with all of our classes and information by scanning this QR code. There's a link to all of our socials where you'll see reels, more educational classes, and keeping in touch with us. Until then, we'll see you next time. Thank you so much for joining us. David, thanks for coming on and showing everyone about LLC formations.
Happy to be here. Thank you.
Thanks.